Hello and welcome to the weekly wraps. This week hasn't actually been the busiest of weeks, but nonetheless we have been served some market volatility. So one of the main sources of focus this week has been on developments in China. So despite actually seeing the week in a relatively unchanged territory, we've seen a particularly volatile week of trade. And that's as further calls for PBOC stimulus continue to be heightened, with particular focus on that triple R rate and whether the PBOC will take action. So we did see source comments suggesting the PBOC has injected 400 billion yuan, that's around $65 billion, into the interbank market. However, towards the tail end of the week, we did see that China downgraded their 2015 growth forecast. Although no specific figure was actually released, this could only provide further ammunition to the cause of PBOC stimulus. So this is very much something we are going to be looking out for moving forward. Then elsewhere, once again, oil has been a key focus within the marketplace. So we've not only broke below 60, we've also broken below $59 per barrel, with markets seemingly unable to find a bottom. So that's as the global glut of supply continues to weigh on investor sentiment. And that was in terms of oil news specifically this week. We have seen both the IEA and OPEC slash their 2015 global demand forecasts. And another interesting development, we have seen both the Algerian and the Venezuelan oil ministers. They have called for an emergency OPEC meeting to address the issue, as it is placing quite a burden on both their countries' financing requirements. So finally, from a Eurozone perspective, this week all eyes have been on that TLTRO allotment, where they allotted around 129 billion euros. So this figure was largely in fitting with expectations. The overall take-up between the two operations is particularly disappointing. And despite analysts suggesting it would have taken a figure of under 100 billion euros this week to trigger further calls to QE, the overall allotment between the two operations very much still does actually leave the door open for QE. And as such, we did see a bit of market volatility following that announcement. So now the latest bank rhetoric is still very much in favour of a QE programme, and it now simply just appears to be a case of when rather than if. So we'll be looking out for any further developments or rhetoric from the ECB to indicate a potential time frame. Although do note that the ECB are still pushing the usual rhetoric that they are going to assess current stimulus in the first quarter of 2015. So that's all from me, and I hope everyone has a fantastic weekend.